السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 17th of November 2024. I'll be doing the weekly market review. Now, I'll starting with the XY here, weekly time frame chart. You can see how price just started up here, took out both of these liquidity pools here, and was close to this buy side liquidity and this one as well. We formed a high that's near to this high. Retail traders are going to be trusting this as means of resistance, and they're trying to short here to the downside. Now we might have a retracement towards this favorite gap, which is the internal range liquidity, a busy buy side imbalance, sell side inefficiency, and we can also see some reaction at this wick, that discount wick. Since we traded above it, we know the market price is above this wick. This is to be considered discount wick. So the consecutive encroachment or the midpoint of the wick, I'm looking at that as an important level that price can work around it, can be influential going forward for the upcoming weeks. Going to the daily time frame chart, there's also this daily favorite gap price already has retraced to, as you can see, as an institutional order flow entry drill here, and we have seen a retracement there. So going to the next week, you see like we're close towards these liquidity pools. If price wants to run to these liquidity pools and then retrace lower towards the internal range liquidity, that would be optimal and ideal. But I'm not holding any strict bias here on DXY. It can retraces as much as it can run up higher, but we're still in a buy program, so I'm looking for buy side liquidity to be hit next week. And that's going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price has last week traded up higher, took out the 6,000 price level, and then this week we traded up higher, took out last week's high, and we started running down lower. We filled the potential favorite gap that would be forming here. And you can call that an immediate rebalance, but I don't call it that way. We're still in a buy program, but if we go down to the daily time frame chart, here's where like if price supports if price retraces next week towards this inversion favorite gap or this daily favorite gap here, and we see some reaction here as means of resistance and push down lower into this favorite gap, and on the weekly time frame chart this inversion favorite gap right there, and go all the way down and close below this level. This level is the midpoint of this bullish order block. So if price closed below this level, which on the daily time frame chart would be, you see that this favorite gap from this candle's high to this candle's low, we have a favorite gap here closing below it, which means approximately closing below this level. We'll be treating everything as an inversion BD array that will push price down lower towards this sell liquidity. You can see this sell liquidity is so smooth. We have 3 touches, 1, 2, 3, and we have a relative touch here on this day. So a lot of liquidity pool is residing below these lows here, and we want to pretty much run it down lower to attack these liquidity pools. We run it up higher, took out the buy side liquidity. There were like a liquidity pool resting above these highs. We took out the liquidity pool right there, and now we're likely to going to push down lower, take out this sell side liquidity, and that's going to be potentially the start of the sell program. That's going to be pretty much it for ES. Going to NQ here, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see how we're starting to break down lower here, the midpoint of that bullish order block here, and we have equal lows here, sell side liquidity here, and this busy as means of drawn liquidity that I'm looking at. We took out the all-time high, as you can see. Going to the daily time frame chart, price broke down lower into this orange shaded favorite gap or SIBI. You can see on ES we didn't reach to it, this one here, but NQ did reach towards the favorite gap, and we're close to the midpoint of that weekly bullish order block with this one right there. And if we close below it on the daily time frame chart, this is likely signaling to us that we're starting a sell program. Price can retrace here towards this inversion favorite gap here and this daily favorite gap. You can see that other line is not really visible, but it's there. That can push price down lower towards this side liquidity here, favorite equal lows, this favorite gap, this side liquidity, pretty much all of the liquidity pools that are resting on the sell side. So that's going to be pretty much it for NQ. Going to EURUSD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see how price just tanked down lower as I mentioned last week. Took out the sell side liquidity. We still have this liquidity pool that's residing here. You can look at this rejection block here, which has already been swept right there. So from here we can push down lower, or we can retrace towards this area here, or even the midpoint of this. Also, we can treat these sets liquidity as means of resistance. So if it really wants to push down lower, since we're still in a sell program, I cannot decide that we have decided to switch to buy program. We're still holding the narrative of lower prices. We're looking for every bid array to hold price pretty much support it, resist it from reaching up higher and push it down lower towards the side of the right there. Going to the daily time frame chart, that's the daily favorite gap here, price retraced, refilled it right there. We have this level as well that I believe price is going to be retracing to it, and it's going to be influential going forward. Above that, we have this favorite gap, and you can see how this favorite gap is pretty much in close proximity to this sell side liquidity, as well as this favorite gap is in close proximity to this sell side liquidity. So in this case scenario, the lows broken down low can be treated as resistance, but it's not always the case. All right, so that's going to be pretty much it for your EURUSD, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, pound USD has decided to break down lower. You can see the last few weeks here, not much movement, but this week we've seen price just break down lower, taking out the sell side liquidity right there and filling that favorite gap right there. Below that, price would retrace up higher, trade the low of that favorite gap. Now it's called inverted favorite gap since we closed below it. As resistance, that will push price down lower towards this is liquidity, and the midpoint of the discount wick right there, which is the consequent encroachment of that wick. We'll be looking at these as means of targets. Below it, we have the rejection block and the low. So going to the daily time frame chart, price would retrace. As I mentioned, we have a daily favorite gap here. That's in close proximity to this weekly inversion favorite gap. Price can work at that level. We have also the bearish order block here with the constant encroachment of that weekly candle, the discount wick. Now it's not a discount wick anymore because we're trading below it. It's considered a premium wick. That would, when you're in a sell program, premium bid arrays will keep price from reaching up higher, and discount bid arrays will be easy to break through them to the downside. So I believe that's going to be pretty much it for this weekly review. It was a brief, short weekly review going to the markets. I'm just trying to show you the path, or the roadmap, but I'm not into really discussing a lot of things, as I'm not a hindsight guru as your teacher or as your mentor. I am a trader, I do trade the markets. I'm not a hindsight trader. You can check my Twitter account, or X, it's called now X. You can check it out. I post some of the trades that I take. Last week I did like 2 or 3 trades, I'm not sure, but that's just a little bit of what I do privately. And I don't want to share a lot of it. I'm just keeping it to the weekly reviews that I'm doing, and perhaps some teachings that I might find beneficial to others. But other than that, I'm not trying to do what other gurus are doing by, oh, look at my account, look at my P&L. I'm not into that shit. But if that's not your cup of tea, you're more than welcome to unsubscribe and just go watch someone else, because that's how I do things over here. So I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.